So here we are in the last video of Chapter 1. We're going to prepare the real financial statements from the worksheet now. So remember in the worksheet we made those pseudo financial statements, income statement and balance sheet, but those aren't the real income statement and balance sheet. So we're going to use those though to prepare the real financial statements. Now first of all we want to make sure that everything on the worksheet is correct, that it all adds up and balances, because of course if it doesn't, then the balance sheet is never going to balance. So when we prepare the income statement, remember that we're going to, in the real income statement, we don't have debit and credit columns. Although we have columns, remember those columns are not for debits and credits. The inside column is for the individual amounts, and then the second column is for the totals. Also remember withdrawals are not on the income statement because they are not an expense. They're going to show up on that statement of owner's equity that we do next. So here we're pulling off our numbers. You can see our income statement numbers on the income statement columns of the worksheet, and we're pulling those off. Notice that first of all we start off with our three-line heading, our company name, the name of our statement, and our date. This is the month ended December 31st. We pull our revenue over. Again, remember these columns do not mean debits and credits, although I know it kind of works that way on the income statement here. So the individual column is, the first column is for individual amounts. I'm not spelling very well today. The first column is for individual amounts, so that's where we've listed all of our expenses. And the second column is for the totals. So since we only had one kind of revenue, that was total revenue, so I went ahead and put that in the total column. Then I've listed all of my expenses individually. Notice I put a single line to subtotal here, and then I put the total expenses in the second column. I'm going to again encourage you to put parentheses around that total expense so you'll remember to subtract it. And then I get my net income number by saying revenue minus expenses. Notice I double underline at the end. Now double check, my income on the income statement is $4,900 and my net income on the income statement of the worksheet was $4,900 as well. Those should match. So from here I'm going to do the statement of owner's equity. Remember, this statement of owner's equity is looking at the capital and the withdrawals accounts. First of all, we need to check and see if there were any additional investments made. We would be told if there were. So we're going to start off with our same three-line heading, name of the company, name of the statement, and the date. Notice the date is the same as the income statement. They're both for the same period of time. Again, we've used columns, but they don't mean debit and credit. They're just for organizational purposes. So I start off with the capital account at the beginning of the period, which was $10,000. We didn't make any additional investments, so that was the same. That was the beginning capital amount. I add the net income from the income statement, and then I subtract the withdrawals. I want you to put parentheses. Let's get out of the habit of using the minus sign. So I subtract the withdrawals. So that gives me my increase in capital, which I put in the second column, and then that gives me my new capital balance. Now notice this new capital balance is not on the worksheet, okay? That's not on the worksheet. We are, however, going to use it on the balance sheet. So now when I get to the balance sheet, one thing to remember, first of all, the groupings are going to be different, and also the totals are not going to match. The balance sheet should balance just like your balance sheet columns on the worksheet balanced, but they don't have the same totals. Also keep in mind that we are not using withdrawals on the balance sheet. So even though they show up in that balance sheet column up here of the worksheet, these withdrawals are up here, don't use them because remember we used those on the statement of owner's equity. So we've listed all of our assets here. Notice that we're going to use that contra asset. We're going to put parentheses around it to subtract it in the first column for the individual amounts, and then in the total column I put that net book value. So I add up my total assets. Then I've listed my two liabilities and I've listed my capital balance. But notice this capital balance is not from the worksheet. It's not the 10,000 from the worksheet. It's the capital balance from the statement of owner's equity. Okay, so now when I add up liabilities and capital, the equation, the balance sheet balances. Now, one thing that I want to super point out, notice that on my worksheet, the totals were 18,680, and here on my real balance sheet, they're 17,975. That is okay. We don't expect them to match each other. We just expect within the same statement, these will balance and these will balance.